Looking at what's happened so far in 2021, it's proving to be a landslide year for private equity. And what's striking about the boom, as I read in your latest research, is not so much the number of deals, but the size of the deals that we're seeing. So break down for us the types of deals that are getting done and how big PE can actually go.
Good morning. No, you are absolutely right. Private equity is getting bigger and bigger, and this year it has got bigger like never before. The whole industry is probably 3 times the size now of what it was 10 years ago, and the biggest step of growth has come over the last 6 months. In this year, we have seen deal value in the first 6 months as great as it was in the whole of last year. We're looking at deals now getting bigger and bigger as individual deals. It's deal value that's driving that growth. The average deal size is over $1 billion so far this year of declared deals. We're going to see deal value for the total year of over $1 trillion. The highest that the market had got before, as you rightly mentioned, was back in 06, 07, when we got up to about 800 billion. It's been averaging something more like 500 billion for the last 5 or 6 years. We're going to be at $1 trillion this year if the pace of the first half year is maintained.
One of the big contributors to that increased pace has been what's happening here in the UK. I understand PE have struck more deals in the UK in the first half of this year than in any other first half on record. To what extent is that down to the relative cheapness of UK equities compared to other markets and just incorporating this sizing trend? How big could deals get in the UK? For example, could we see a Tesco get taken out rather than a Morrison's?
Yeah, if you look at the, well, first of all, starting with the UK, you're absolutely right. The UK is the largest part of the private equity market in Europe, and it has been benefiting from a whole set of the tailwinds that the market's been experiencing. And on top of that, as you rightly note as well, the public market here hasn't gone up as much as the public market has in some other geographies. So we've seen a little bit more public to private activity here, and we'll probably see more of that to come. With the fundraising that's going on, we're going to see over 1.3 trillion raised into private equity funds this year if current pace is maintained. That gives dry powder of well over 3 trillion in the industry. And that gives a lot of firepower to take on some very big deals, including some very large public to private. So whether something as large as Tesco's could be in the sights of private equity, that I'll leave to everyone to have their own thoughts. But there's certainly the firepower there for big deals.
Yeah, really interesting what you're saying there. And I think, another thing that stands out from your report is about 1/3 of the money that's going through is going into the tech space, namely because there's still so much growth being exhibited in that part of the market. Turning it back to the conversation about the UK, what is the thesis here? Is it that these companies are betting on a long-term growth and recovery play, or to Juliana's point, is it simply a function of valuation?
The vast majority of investment theses now in private equity are around growth. And that's why technology is such a popular sector. As you say, 1/3 of deals now are in the technology sector, and that's relatively narrowly defined. Actually, if you look at deals that have technology in them, fintech deals, healthcare tech deals, tech-enabled services, that number would be even higher. And it is the long-term growth prospects. So people are paying very high multiples for those businesses, both EBITDA multiples, and indeed we're even seeing private equity now talking about revenue multiples, the land of venture capital, as growth capital becomes a bigger piece of what's going on. The UK market, as I mentioned, there is probably some increased interest here given the slightly lower PE within our FTSE, within our stock exchange here, relative to some other European markets.